So this is going to be a trade breakdown video. So there was a trade that we took together on Friday, right? And it was through the Telegram GC. Now, I was giving you guys kind of the nudges on where do you expect price to trade to. And so you guys asked for me to break it down. So let's break it down. Now, notice how I haven't taken you guys to a minute time frame, 5 minute or 15, and we're on the daily. The crux of your intraday is from the higher time frame and understanding where you are in the weekly profile and the daily profile to expect. So it was Friday. It was Friday. Now, what happened in that week? This low was made on Wednesday. And you see, if we take this low to the weekly candle, right? This was where the weekly was. We got close to that fair value gap and we're moving up now, right? And on the monthly, this is deeper into the monthly redelivered rebalance. Now, when you see Wednesday made that swing point within that price level on the higher time frame, right? This on the daily may just look random, but where it is on the weekly, in terms of the weekly profile, it's not. This makes sense for a Wednesday midweek reversal. Now, saying Wednesday midweek reversal, what do we expect Thursday and Friday to do? Thursday moved up higher. Friday, you can expect it to move higher. I expected it open, low, high, close, delivery for for Friday. So in saying that for the dollar, I'd expect that for euro as well, right? Well, the opposite. I mean, I expect the open, high, low, close delivery. Now, this was what we were working off of. 9:45 a.m. in US time, New York time, there was a USD red folder. So now this is where we drop down to the 50-minute time frame, and we know what we're expecting throughout the day, right? So this was the day 16th. Now if I remove this and we do it together, right? So that this is the day, right? This was a low made, and this was a low made in London, right? Now you see how the build up to this event. Now from the lunch period and New York, where are you going to expect the move in New York? This is time and price. You know when we say time and price, yes, the time that we consider is the kill zone. However, more so the time that we consider is this economic calendar. This is telling you where the move is, you know, with a greater, accuracy. 2:45 a.m. UK time, 9:45, 2:45 p.m. UK time, sorry, 9:45 a.m. New York time. This is when you're going to expect the move to happen in the New York session, right? So what do you expect at the start of New York? Not much. Now you're going into a consolidation. Now we know what we're expecting already for the day. Bullish prices. Now if I'm expecting bullish prices and I'm looking for continuation trade, I have a London to New York OTE on standby, right? This low to this high, that OTE, I have that on standby, and that's what I use for Euro USD. Now we have accumulation, manipulation with the news event. Look at 9:45, right? And that's the distribution. Now, if you don't understand where you are on the daily and the day that you're expecting, you see how you would have just been ripping your hair out here. Now, let's go to Euro, right? Remove this for a second. So you see, again, we had consolidation. Now, we spoke about a OTE cheat code, and this is essentially the OTE cheat code in fruition. Midnight opening price. We have that move higher. All right, we come down. Now, Omar, why use this swing point and not this swing? This is the actual high. That's true. That is the actual high. However, if this high is going to get taken out, this high is so local to this high that I'm assuming that this high is going to get run through as well. If we get a run above this high, it's going to be a punch that runs this high and that high collectively. So let me just anchor my fib there because that's the invalidation level, right? This level, it will just increase my stop loss with basically no added reward essentially. Now, this high I'm using, and it's still inside of the London open kill zone. Be aware of that. Now we're using this low. Notice how, yeah, when we come to this low, we make a high and we make a low. This is internal of this range from this high to this low. You see how we haven't added lower. There's no lower low here. This is internal. Now, what is the OTE cheat code? When you have a high and a low and you're making in the internal range and you're just floating around equilibrium, hunt that power of three into OTE, right? So you see, I was getting in. If you want a 5 minute, this is a clear fair value gap at the midpoint of the OTE, and I targeted just the low here. A simple trade. What was the backbone of this trade? Knowing where the daily candle was likely to go, knowing that I'm not expecting, right, the high of the previous candle to get violated. I'm expecting the low of the previous candle to get traded through. So I'm hunting for short positions on euro. Now, okay, I'm looking to hunt short. What time of day should I hunt for the short? I like the New York session. What time specifically? This economic folder is going to tell you. By the way, do not nudge and brush these orange folders. These orange folders you still consider. Some of you have just filtered out everything to just only red. Don't do that. Keep all of them because this, you can still consider this. This can make a little run on stops. Now, in saying that, remember this, right? Now, this was a breaker. So you could have entered here and if you didn't get that entry, you then have the move back into this level of imbalance created for the candle with this big candle, and you have this breaker block, right? This low, right? Low, higher high, lower low. The lowest down close candle. So it's essentially this candle. Any retracement up into here with a safe stop loss, and you could target, a sell side liquidity pool being here. Now I took a sell side liquidity pool of this because it was a 2 risk to reward trade, and a lot of you asked me why not go for the zero. I could have went for the zero, right? I could have went to the zero. Now, I was still banking that it was going to the zero. However, what do I need to be profitable in the long run? Remember what I said in chapter 5. What you need to be profitable, the right to be profitable and the right just for, your own kick is two different things. Your take profit isn't at the right to, have a kick at the market. Your take profit is going to be at the right that you need to sustain longevity. This two. This 2R. Of course, I could have went for 3R. That isn't where I put the paper trade. The paper trade was too this low. Now I want to show you guys something, right? If I just remove this fib as well. We have a breaker here, right? If I use this low and this high, just extend that out. The low of this candle, 5852. The low of standard deviation 2, 5851. Do not sleep on weekly commentary 9. Now this is how you can apply it, right? Whenever we have a breaker that's in line with my bias, I automatically apply these fib levels, right? You see how there's going to be more down here, right? You see how the swing point was made here. Now, without saying too much, right? So the conversation we're having today in the Telegram, today being the 17th of December, 2022, just in case this mentorship goes on for a bit longer. When you get a breaker in specific times of day, right? So a breaker is essentially the run on stops. Weekly commentary 9 teaches you can apply deviations in line. So if it's a bearish breaker, you're taking the deviation that this run on stops done. Where are these stops? Where is the algorithm after taking these stops going to reprice? It's going to consider a deviation. The break has to be specific time of day. This time I can't go into, right? There's a bit more context behind it. Now, why is this useful? Now, yeah, it's cool. It's got this low. It nailed it this low. Absolutely nailed it. But if I didn't get in on that turtle soup on, these internal highs into the OTE and lower, you see the retracements here. It still tells you that there's a deviation level that we can trade to. So if you got in here, you could have taken profit at the second deviation. It just shows you that, you know, is there still is it still willing for should I still be willing to get in line with price? Is there still a reasonable move left on the table for me to capitalize on? Well, if you're here, yeah, your stop loss, right? You could, potentially put your stop loss above the breaker block and maybe target a 1-to-1 to this second deviation. You see how you use that tool? It kind of tells you, you know, should I capitalize on the move? Is there still like a take profit level that I can get into, at least like a 1.5 R? That's something that you could have considered. But yeah, simple. Understanding the likelihood of the next day trading higher or lower, and a simple continuation trade in line with it. That's all it was, and I elected to use the London to New York optimal trade entry, and it was an OTE cheat code. There was a high to run here, internal liquidity, right? We created a range, power of three that delivered us to the optimal trade entry, and a move lower. That's it, right? So if if we get more of these, I'd consider doing it. I can't do it for every single trade, there will be too many videos, but perhaps we'll take a clean one or one that's a good case study and we can go through it weekly. I can try add that to the arsenal of the mentorship. So, yeah, until next time, see you guys later.